Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com. I want to look at a couple stocks here. First, just following up on Chewy here. This was a stock, remember, I covered this back on the 10th here on Tuesday because the company announced earnings that were disappointing. The stock gapped down, traded even lower, and then snap hooked, reversed, and closed higher on the day on volume. This is big, massive, more than twice average volume. So that was our buy signal right there. I started a position towards the end of the day. I wasn't watching it. Be perfectly honest with you, I never even knew this company existed. But somebody in the forum mentioned it, and so bam, there it is. You're buying the stock here. The next day it gapped up. Imagine my delight. And then the following day, meaning today, the stock gaps up again. Well, so let's look at the patterns here. First of all, this is trading well outside the upper Bollinger Band. That's kind of not supposed to happen. You don't really see stocks do that at all here. Every once in a while, it'll push outside the Bollinger Bands one way or another and then immediately reverses. Here, barely poked its head above the upper band and then immediately reversed. Well, here, we got the initial, forget about this here, but we got the initial move here outside, then the next day outside again, but then it reversed, and then the next day outside again. So it's like 1, 2, 3 days the price moves above the upper Bollinger Band. 4, 5 days in a row, this stock is outside the upper Bollinger Band. That's just not supposed to happen. It's almost kind of like against the law of statistics. And that's why the Bollinger Band's expanding. It's really racing, trying to chase and find the stock. So here's the thing, though. We don't know how high this is going to go, so I think you need to be more thinking about your downside. I would stay long the stock. You're not going to get out right at the top by this strategy. I would set my stop right now at $26, like $26.95. The idea is I'm going to stay long the stock as long as it continues to print higher intraday lows and higher intraday highs. Okay, and since today's intraday low was 27.01, then I'll only be stopped out if the stock prints a lower intraday low. And if it does that, then my thesis is that, the big buying spurt is over. Not saying that the stock might not ultimately move higher, but I'm trading this kind of order flow thing. And after 3 big days, remember, they don't have a 5-day rule or an 8-day rule. It's a 3-day rule. The smart money's buying on the first day. Semi-smart money's buying on the second day. The dumb money's buying on the 3rd day, so Lord only knows who's buying on the 4th day. So anyway, that's something that you might want to look at. And then another one, and I cover this in the strategy session, guys, but I thought I'd show you this. Cheapo stock, $4. Trading right off the 50-day moving average. So you can actually buy this stock here. You have to give it a little more of a wide berth because it's a lower dollar stock. Give it about 8%. That's a big stop for me. Maybe even a little bit more than that. But the idea is this stock had a big reversal here, down over 20%. Now it's finding some support. We want to see some follow through here. So, okay, that's it. And members, we have a live training session tomorrow at 8:30 Pacific, 11:30 Eastern time. So we'll be looking at the growth stocks, and I'll be showing you some other things as far as how to pick stocks. Look, everybody, this market, and I mentioned this in the strategy session tonight, guys, this market feels like it's really ready to take off. And I'm not talking about China and all the other dumb stuff, just because there are so many setups that are very close to just blasting off. So if we start to see those things taken off one at a time or all at the same time, you're going to see some really good moves in the market, which means you're going to see some really nice gains in your account. All right, see you next time.